I think let's start with Meta, because everyone's talking about Meta in the AI context. Huge run up in market cap. It is completely outperforming its social media peers because of AI. What are your expectations for the name?
Yeah, first of all, good to see you both, Ed and Caroline. It's always good to join the show. Meta has been on an incredible run, and what it's recently been able to do, both in the open source community with its new Llama models, and of course being able to build on those models and apply them to their technology, has been nothing short of astounding. Last year it was all about the company getting operationally in line. They made the cuts they had to make. They started growing. The market and the street really reacted well. Now it's, can they continue that growth on a year-over-year basis? And they've had several continuous quarters of really great growth, but I think they can do it. And I think they did get a boost with what's going on with TikTok as well. And I don't know that that will immediately come into effect, but I mean, they are the biggest winner of that decision. And so what the market really should be expecting is this company is going to be talking all about AI today. They're going to be talking about how that's going to create better experiences. And they have this really committed platform. And unlike search, which generative AI is going to disrupt, the reason people are on Meta's apps and on Meta's platform is more about community. It's more about social. And I think they're going to become the biggest winner in this this AI boom.
When Meta's earnings statements hit and on the call, I'm going to be looking for commentary around ad pricing growth from AI and impressions. But it's a different AI story to Microsoft, to Google. That's next week. But is there a commonality between those two names in this earnings season that you're focused on?
Yeah, I think it's the ability to apply the AI technology that's being developed to driving that revenue, driving margin enhancement, creating stickiness on the platforms. Across the board, we know that the search market is going to be disrupted, attribution, click-through, but people spending time on social platforms, AI is only making it stickier, which is going to give pricing power to Meta, and you've got to like that a lot. I also really love what they're doing in terms of building their own technology. The company's become the open tech company. I mean, who would have thunk that in the world of Apple and Meta, that Apple was going to go closed and Meta was going to double down on going open? They're building these really robust, high fidelity models with Llama 3. And then, of course, now with Horizon, they're doing it for AR and VR. They're basically saying we're going to be the open platform for developing these next generation technologies. So there's just a lot to like. The one concern I do have is that on a year-over-year basis, they've grown so fast that this expectation from the street, they could have a great quarter and still miss. And I think you have to keep that into perspective, that they've had 6 tremendous quarters in a row. At some point, that music's going to stop. I think we're going to be asking that question about NVIDIA later this quarter as well.
Yeah, with such a huge market capitalization increase on Meta, can they live up to it? But Dan, in that breath, we did hear Ed mention Microsoft and Google, Alphabet. Both of those are cloud names too. And I want to just focus on the cloud name that's coming after the bell today, because IBM, of course, big ideal on hybrid cloud, on-prem, of course, and then bringing it to the cloud where your data was going to be stored. I'm interested in what you make of all this rumor around a deal with HashiCorp, and more broadly, what you're expecting from the numbers.
Yeah, IBM's a really interesting one because I've been very fond of the growth and the strategy. I've spent time with Arvind Krishna, and he's really doubled down on hybrid cloud and AI. It's not trying to be a hyperscale cloud provider like an AWS. It's really saying we want to be the enterprise cloud provider, and we're going to double down on AI. And where's that coming through? Really with their Watson X product. So Watson X on a quarter-to-quarter basis has seen its numbers double the last couple of quarters. And you're still talking hundreds of millions of dollars, but this platform has a lot of what the enterprises need. It's the data strategy and management, and it's also the governance and compliance. We hear so much from these big cloud providers about issues and risks related to how data is trained and how people are consuming it. IBM has really leaned in on that governance, and I think large enterprises are giving the company a look and saying, we need someone that can really manage our data. So I'm expecting that number from Arvind and CFO Jim Kavanaugh to be a big focus today. Having said that, you asked about the Microsoft Googles. I mean, look, those two have been the fastest growing two clouds. I expect that to continue. Google came off a really positive Cloud Next. They're building out their own silicon. They're vertically integrating. And the one thing I'll say is whether it's OpenAI, whether it's Gemini and Vertex, all these large cloud providers are finding that people are building on more than one cloud. And AI has been the driver that's finally brought this multi-cloud strategy to life.
I just want to go back to what you're saying, almost with Meta, being like, they can still have a great quarter, but miss the very heady expectations. More broadly, we have seen this market near record highs still because of this AI play, this euphoria. Do you really put stock in the fact that these companies can live up to the high expectations of this quarter?
I'll tell you what, the entire market is on stilts that these companies need to live up to the expectation. There really is so much troubling economic data out there, whether it's the sticky inflation, whether it's higher interest rates, whether it's concerns about elections. You got geopolitical issues around the world. And right now, AI has been the propellant of this industry. NVIDIA's numbers will create probably more concern than even these. But look, if Microsoft and Google have a tough quarter, and to some extent Meta too, people are going to start to be alarmed of whether or not this AI growth is going to accelerate to this multi-trillion-dollar opportunity in the near term. Because with higher rates, you got to discount long-term cash flows. You have to look against the value of growth, the forward multiples. But AI has kind of enabled us to all oversee it because Microsoft's OpenAI is accelerating. Google's AI is accelerating. Meta's AI is accelerating. So I actually think that this week and then next week with a couple of the, the Amazons and the Apples that are going to follow, if these don't come out well, Caroline, I actually am concerned that this could be what drives the next leg down. But having said that, I am optimistic that these companies are going to get more clear and prescriptive as to how AI is driving growth and how it will continue to drive growth, productivity, and efficiency, because people want to see earnings.